So we have a lot of clients who are expats living in Europe, the Middle East, Africa, Asia. Are you able to help those clients, and how, based on the fact that their tax residency is not the UK?
Yeah, no, absolutely. We help them, and in fact, I often get invited overseas to give talks to groups of investors in various countries around the world. A lot of overseas countries have a different tax system. I know, John, you've spent a lot of time in Hong Kong.
Yep.
And you were explaining to me earlier the favourable tax regime they had there. I think the important thing to remember is that there are two tax systems that we need to navigate on their behalf. Firstly, because a property is physically located here in the UK, it will always be taxed primarily here in the UK. And then we need to look at what the tax system's like in the country in which they live in. But very often, under the double taxation treaty agreements between the UK and other countries, there's some very favourable tax planning opportunities available for clients. So when you was living in Hong Kong, because you're British, you would still have access to the UK personal tax allowance, which meant you could get some tax-free income here in the UK. But because Hong Kong is a low tax jurisdiction, you often would find that people living in those kind of countries don't pay any tax in that country either. So for a lot of our non-UK resident clients, quite a lot of them actually pay very little tax at all.
And you can advise them on different jurisdictions, or do you bring in outside assistance on that?
We have a good understanding of the double taxation treaty agreements, which is a crucial legislation there. For me to say to you, I know everything about the Spanish tax system, the Italian tax system, or that would be incorrect. I don't. Yeah. But what we can do is say to them, here's the questions that you need to ask the tax advisor in your country of residence.
Yeah.
And that really is helpful for them, because they can very quickly understand what the tax position is like for them in those countries.
Okay, and on those people, is the advice similar around owning a UK SPV or a UK limited company to own the property, or if they're non-resident, is there an advantage to hold it in their own name or a limited company?
It varies, once again, and it all really depends on what the client is looking to do. I mean, if they're looking to just to hold one or two properties and they're entitled to the UK allowance, then they might be better off just owning it in their personal name, because it's a simpler tax administration. Yep. They'll get 12,500 free. So if they're a married couple, they get 25,000 free. And if there's no tax on that income in their country of residence, then 25,000 tax free. Very simple administration. But if they're looking to build up a more substantial portfolio, then more than likely the limited company would still be the route for them. And there are a number of ways we can help them utilise their tax allowances via the limited company. So, as I said, it all depends on what their plans are, what their nationalities are, and which countries they're living. So we look at it individually, we look at the tax treaties between those two countries, and then we advise accordingly.